Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
And welcome into Financial Focus, brought to you by Gulf Coast Financial Services founder, CEO John Kuykendall, here as our resource for that common sense approach to planning, the information that we need to know. John, a lot of people got off track in 2020. We've talked about your top news stories, what you see happening in 2021 with inflation and interest rates and market volatility and taxes. Going to be a big story as well. But what do we need to do to stay on track if we managed to get through 2020 unscathed, or get back on track in 2021 if we're a little off course?
Well, I think what we need to do is get back to thinking about our retirement. I know we've had a lot of distractions in 2020. A lot of things happened to us that we weren't expecting, and certainly no one was expecting the economy to be shut down like it was. And so, there were a lot of things that were different about 2020 that really upset a lot of people. And the government made it easy for us to take money out of our 401ks if we had a COVID event. So it was very easy to spend some of that money that we'd been saving.
Just because the government makes it easy doesn't make it a good thing to do, though, right, John? I mean, I just got to put that out there.
No, I mean, if you took money out of your 401, you got 3 years to put it back in, or 3 years to pay the taxes. But that wasn't what it was meant to be, and certainly didn't help us. But one of the main things we need to do is I met with a couple yesterday. And the situation we were in was they were really short on what they needed to have a retirement lifestyle that they wanted. And one of the reasons was when we looked at the way they were allocated, they were all allocated safely in savings and CDs, which, as you know, with these low interest rates, it doesn't give us much of a return. And so, we've got to have a growth bucket that's going to give us some return. We have to take a little risk. We can't be so conservative that we're not getting anything. I mean, while interest rates have been great for the housing market, and I think in some of the stuff that I read that, now with a 2.875 interest rate, which I just checked with my bank yesterday, and that's what they're giving, you can purchase a $490,000 home. Now, you may not need a $490,000 home, but that's the difference. In 1985, when interest rates were 11.5, that only bought a $200,000 home. So interest rates have been a blessing in the real estate market, but they haven't been a blessing in the savings market. And I really don't see interest rates going up anytime in the near future. I think we're going to keep interest rates low. So we've got to figure out a way to get more return on our investments.
Well, and the federal government tends to seem to agree with you with the 30-year Treasury rate under 1.5%. They don't foresee interest rates improving significantly in the near future either. But that's an interesting stat with how much home you could buy based on a $2,000 a month budget, significantly more house today. But then again, John, I have to imagine that somebody with $2,000 a month to spend on a home in 1985 was buying a mansion, where in 2020, $2,000 a month is buying kind of a McMansion.
Oh, yeah. I mean, a $200,000 home back in 1985 was a nice house.
Right.
I mean, it was the same house that you're paying for $500,000, $600,000 now.
Right.
So, yeah, you're right. Comparative it is. But, still there are bargains out there, and people need to live within their means if they're going to retire.
Well, and that's your other big story of 2021, which was the inflation. There's your paramount example of how inflation works. We can buy a much higher dollar value home today than in 1985. But guess what? It's just about the same size home that it was back then too.
Well, look at automobiles. I mean, I just looked, I saw this commercial on television where they had the Cadillac Escalade. And I thought, man, that's a nice car. I wonder how much that would cost. And so I looked it up, and Peter, an Escalade, a 2021 Escalade, the average price is over $100,000.
Ooh, wow. Okay.
So, I mean, we're considering back when you could buy, a Cadillac for 35, 40,000.
I'm going to have to go pull some old classic car commercials, get some of those 1960s, 1970s, rolling off the assembly line, the 1970 Mustang for a manufacturer suggested retail price of $5,000. We'll have to air some of those throughout the program in the year to come, just to remind folks about inflation.
Well, sure. I bought a 68 Volkswagen in 68 brand new and paid $2,250 for it.
Yeah.
I mean, that you see what inflation does, and people don't realize that's going to eat into their purchasing power. It's going to eat into their lifestyle because they're not going to be able to save. Medical costs are going up. Medical cost is going up at over 5% annually, compounded. So, medical costs are going to be a huge problem we got to worry about. But one of the ways that people can get back on track is certainly to take a look at their 401ks and get that free money, the employer match. If the employer's matching, we need to contribute at least up to what they're giving us.
Yeah, hard to say anywhere else in the financial world where you can guarantee that kind of immediate return on your investment. Now, John, I've always taken issue with the term free money because the way I look at it, that's part of your salary. I mean, you are working for that money, you're entitled to it, but you only get it if you put some skin in the game and make those contributions to your own retirement. So we need to make sure that we're doing that, but not necessarily free. I mean, you're working for it. You're just not getting it unless you make the contribution yourself.
That's right. But if you don't make the contribution, you don't get it. So you're giving away that opportunity. You're giving away that return to get an additional boost in that retirement savings. And so, you want to make sure that you max that out the way you can. The other thing too is, we had a pretty good year in the market in 2020. And so your allocation may be out of whack. You may be taking on a lot more risk than you should. You may be taking on a lot less risk than you should. And certainly, one of the problems with 401ks, there's not a lot of advice given as to how to allocate or what you're doing. And so instead of filing that, a lot of my clients say they get their 401k and they just throw it in the desk drawer and close it. Maybe they need to take it out, take it to an advisor and let them look at it.
Yeah. And John, if we don't rebalance on a regular basis, we could be exposed to a much higher level of risk than we initially set out to be exposed to. And we might miss some opportunity to capture some gains along the way. I mean, rebalancing is one of the core fundamental principles of long-term financial success. And yet most of us ignore that in our 401ks, a key to getting back on track.
Well, yeah, the allocation certainly is something that we should look at because, as well as I know, if you look at that chart that we have that shows what sector was number one this year, and it's usually the last sector next year. And so if tech's moving your portfolio up, and it's not, now might be the time to reallocate and get out of that. And get less of it because you certainly have more of it, Peter, because that is what made you the most money. I mean, there were some mutual funds in 2020 that paid close to 100%. Now, if you were lucky enough to be in one of those funds, then certainly you're out of proportion in your allocation and you need to do something about it.
Right. The .com bubble, another example of where rebalancing or lack of rebalancing had negative implications. 2008, a lot of people were overweighted. And in the decade since the Great Recession, really 2010 to 2020, equities have done phenomenally well. And if we have not rebalanced, again, we are now overexposed to risk. And there's some probably profit on the table that we could go ahead and take and capture and move over and maybe protect. And then, John, if there's another subsequent downturn, time to rebalance again and get in when the getting's good.
Right. That's right, Peter. And certainly, the 401k is the money that you're setting aside. It's your money. You're putting it in. As you said, you're working for it. It's coming out of your paycheck. It's something that's not free to you. And certainly we should take advantage of it and do the best job we can. It is actually, while it's not a pension, it is your pension because you're going to have to live off of it when you retire because that's what you got.
Yeah, a rose by any other name. A 401k is not a pension. And we need to understand that while it has replaced the pension, it has not, by and large, done us a sufficient job of replacing the income and the security that the pension once offered us. So
No.
again, kind of to get back on track or to stay on track, John, we should probably run some retirement income planning scenarios and see what that 401k can turn into for us. To count and rely on for the income in retirement.
Well, that's right, Peter. And one of the reasons we need to do that is as you know, that 401k investment options are limited. They're limited by the plan and by what your company puts you in. So you want to make sure that you do the best job you can with what you've got. And certainly at some point in time, there may be an opportunity to do an in-service distribution. And so we can take that money out, roll it over into an IRA without tax consequences, and then make that money do a little better for us because we have more investment options. Certainly something that we should look at too, based upon your age.
Well, John, if I can summarize and paraphrase a little bit, to get back on track or to stay on track, there are kind of two different sides to this, the side on the savings end and the side on the investment end. On the savings end, if we budget, if we do all the things to earn more and spend less, we can actually save more money. And then right now, there's absolutely opportunities to increase the interest rate on the savings from the low interests that we're earning in the bank. So that's kind of the second method on our savings. And third, we can identify underperforming assets. A lot of times the more secure conservative side of our portfolio in bonds and fixed income is not performing sufficiently, is not giving us growth nor the safety that it once offered. And so we can improve that. We can reach in and identify and find those underperforming assets. Then on the investment side, there's a whole world of things that we need to be considering with the 401k, it sounds like, in order to make better use of that tool and to get that back on track.
Oh, sure, Peter. The main thing is that you hit it on the head when you said budget. Very few people actually sit down and have a budget. And the budget is the key. These people I met with yesterday, we had no idea how much money it was going to take in retirement or how they spent their money right now. They just knew that they made money, they were getting ready to retire, but they had no clue as to how they were spending their money. So, when I asked them how much is it going to take for you to live on, it was a question of, I really don't know. And we had to sit there and kind of figure it out because there was no budget. You hit it on the head when you said that you can save more money if you have a budget because you know how you're spending your money. And certainly, I like to do the budget. I do the income plan. We talk about that all the time, having that income plan so that I'm working towards budgeting towards my retirement. And the sooner I start, the better off I'm going to be.
Well, if you would like to realign your financial focus, get that plan in your hands, stay on track in 2021, set goals and benchmarks and work the plan to achieve them. Or if you need a little bit of help in getting back on track for the year ahead, John Kuykendall and his team there at Gulf Coast Financial Services, they'll help you refocus or focus on your plan and get that plan in your hands. It's a comprehensive plan, but they boil it down to easy to understand steps, action items, priorities, and a timeline under which you should be working to accomplish those goals and executing those steps. Pick up the phone, give them a call. They put that plan together for you with no cost, no obligation. Certainly something that is excellent to be able to refer back to and make sure that you're staying on track in 2021 and beyond. You can reach them to take advantage of that. Give a call, 386-755-9018, 386-755-9018. You can also go online, gulfcoastfinancial.net, gulfcoastfinancial.net, to be in touch with who has been named best of the best in financial services 6 years running now, John, by the Lake City Reporter.
6 years running. Yep.
6 years running, serving Central Florida, North Central Florida savers and investors. And if you've got questions or concerns, an excellent resource to have on hand to be just a phone call away, there to help create the plans, craft the plans, implement, execute, and continue to monitor the plans on an ongoing basis. All important steps in your financial progress, staying on track or getting back on track. John, we always appreciate the time, and we're looking forward to that book here coming out, Financial Focus, of the same title as the podcast, and really giving a lot of the information that you feel savers and investors need to know in order to make the progress.
Yeah, I'm really excited about the book coming out. We finally got it done, and I'm really excited about offering it to our clients and prospects and the people in the community, the people that listen to our podcast. So if you want that book, go to the website under the contact and send me a request, and I'll send you the book.
Absolutely. Or if you just are dying to pay for it, you can pre-order it or order it on the website as well, gulfcoastfinancial.net. But John does have copies available. Give him a call, be in touch, go to the website, grab your copy of Financial Focus, and get your Financial Focus plan in your hands. That's specific to you. 386-755-9018. John, always a pleasure. We appreciate the time.
Thank you, Peter. It's great to be here.
Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting gulfcoastfinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services Inc., a registered investment advisor in Florida. Gulf Coast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.